do you think of this number, Steve? On the surface, it looks really bad. I know that you point to some items that actually slowed in terms of price gains, but still, if you're looking at food, you're looking at shelter, you're looking at energy, I don't know what's more core than those three.
Well, you're asking a very, very important question, and I think you're right. We really can't discount the importance of the rising inflation in terms of its impact on the economy going forward. But in terms of getting into looking at the momentum underlying the inflation rate and where it is going from here, there were some signs in the report that we're starting to get to the point where it is peaking out. But keep in mind, this high level of inflation is eroding purchasing power because you're right. You can't take out food, you can't take out energy because households consume both of those in fairly large quantities. So it does have a significant impact on the economic environment, especially now and going forward, even if it's starting to peak at this juncture.
And here, yet again, we can cheer the fact that incomes are rising as well, but they're not keeping up with inflation.
No, I'm afraid the sad part of the attempt to raise the living standard of a lot of Americans from the lower incomes to the middle incomes through subsidy payments that came out of the post-COVID stimulus packages is going to wind up backfiring and create an environment where household purchasing power will be less at the end of this than it was before we began it.
Stephen, when we look at the driving factors of inflation right now, I assume the supply chain is still having a big impact. The war in Ukraine, with the extent that that may impact food prices, to be sure. So if we have a Fed that is trying to cool things down economically, they're trying to raise rates, is that really going to do anything to solve the issues in the supply chain, the war with Ukraine? I mean, do they really have the tools to really handle the inflation that we're seeing now because of the reasons that we're seeing inflation?
Well, you're right in terms of the specific components of inflation, but they will succeed at contracting economic demand, and economic demand being in excess short-term of overall supply creates additional upward pressures on inflation. So therefore, by contracting economic demand through the higher interest rate profile and through the quantitative tightening that they're adopting, we'll create an environment where other components will come down. You look at this morning's report, for example, you saw that, rents really weren't accelerating any further. Homeowners equivalent rent wasn't accelerating any further. Used car prices started to come down. There are components in here that's suggesting, yes, what the Fed is doing is going to have an impact on other components in the CPI, not necessarily the ones you pointed out. A big driver in here was basically hotels to the upside in the shelter costs. If you really wind up slowing the overall level of underlying economic demand, forgive me for that, you really get into an environment in here in which that demand for hotels could come off, and yes, those hotel rates will come down.
So you've mentioned a couple of the items where the pace of gain seems to have slowed or even maybe declined just a little bit. So we're looking here at this was a March number of 8% plus inflation year over year. What do you think it will be when we get to the fall, September, or the end of the year, December? And of course, in the middle of there will be an election.
Well, let's look at the December numbers more importantly, because I think the December numbers will probably be down in the 5% year-over-year growth numbers. Where we are in September, we will probably be coming down towards that number. So we're probably somewhere around the 6.5% number. So I think we are going to be coming down fairly quickly. A lot of that is base effects. So we can't keep on growing at this rate unless we're really accelerating the underlying pace of economic activity. And with what the Federal Reserve is doing, and we're already starting to see cracks in the system in terms of the growth numbers out there. We've seen it in the housing market to some extent. We've seen it in the auto space to some extent. There is going to be a drag down effect on the economy, and it is going to lead to lower inflation. But again, that drag down effect on the economy is also going to be negative for a lot of those households in that lower to middle income level. And for them, it's going to feel like a bigger downturn than it is going to happen for the overall economy.